Yes, people, a very, very happy Sunday morning to all of you. So, guys, we're doing this chapter called as Rules of Debit and Credit. The last class, we completed a discussion on Golden Rule and Modern Rule. When did you complete?
Traditional approach.
Modern Rule finished? Golden Rule. And now Modern Rule. Very good, very good, very good.
Traditional approach.
Golden Rule, also called as Traditional Approach. Wonderful. Today, we'll be heading forward to the next new rule, which is called as modern rule, modern classification, also called as American approach, also called as accounting equation approach. Now, the first question that you should ask me is, when one rule is already in place, when there is one rule already in place, why are you having another rule? Ask. Next chapter, now only I'll discuss. Now only I'll discuss. Ask first. Why? Okay. She's got the answer.
I'm not sure.
No problem. It's okay. Yeah, tell me.
Golden rule does not satisfy all the rules of accounting. So we have imbibed modern rule to satisfy the rules that cannot be satisfied by golden.
Very good. Got it. Somebody else said something. Perfect. She said it correct. Through golden rule or by using golden rule, you are not in position to give answer for all the journal entry. In other words, through golden rule, you cannot generalize all the type of transactions. Time and again, I'll prove you. Some transactions today, some transactions throughout the 11th, some transactions in 12th standard will prove it to you that you cannot pass a journal entry. You cannot arrive at the debit and credit by applying golden rule. That's why a new rule has been evolved called as modern rule, which is considering today's economic situations and the complexity that we have in the business, considering that they were forced to come out with this rule. Golden rule is something which was there in the olden days, decades and decades ago. At that point of time, the business transactions are not that complex. So you were able to manage the transaction somehow with those rules. Today, what happens? The business is dynamically expanded. There's a lot of complexity that is getting involved in the business. Now, those complexities, for resolving those complexities, golden rule is not sufficient. Therefore, experts had to come out with a new rule called as modern rule. Now, how they derive the concept of modern rule, I'll tell you. Please tell me, what is the ultimate purpose of you preparing accounts? What is the two primary motto of you preparing accounts? Two primary motto. Two primary motto. Wrong. To know the profit and loss of the business, right? To evaluate the profit and loss of the business. And this is measured. This is measured by preparing a document called as trading and P&L account. I want to know the profit and loss of my business. I want to know the performance of my business. I want to know the performance of my business. Performance of my business is reflected through my profitability. If I'm in profit, I'm doing well. If I'm having less profit, I'm less doing well. If I'm at a loss, I'm doing bad. So my performance is reflected through my profit and loss, what I earn. And for that, you prepare a document called as trading and profit and loss account. The second purpose of you preparing the accounts is to know the financial position. Financial position. This is financial performance. And this is financial position. Financial position can be ascertained only by preparing balance sheet. How do you get profit and loss? How do you get profit and loss? So from income, if I minus expense, capital, from income, if I minus expense, I'll get profit. If income is more than expense, what is it? Say loss. What is it? Income is more than expense, profit. If expense is more than income, loss. In balance sheet, what all information do you capture? Please tell me. What are the primary information that you capture? You know the format of balance sheet roughly. The balance sheet is bifurcated into two parts. This much you know, T-shaped format. Left hand side, liability. Left hand side, capital also will come. Right hand side, asset. So in this balance sheet, what is the three primary items that you're focusing on? Asset classification, liability classification, and capital classification. In your P&L, what is the primary classification? Income is one classification and expense is another classification. You take any transaction, you take any account, you will be in position to categorize those accounts in any of these 5 categories. How many categories? 5 categories. Income category, expense category, asset category, capital category, liability category. You take any account, you name an account, you'll be comfortably be able to classify them under these quadrants. I told you in beginning also. Remember, I gave a quadrant. Remember, not remember. Like how you forgot revenue expenditure, capital expenditure yesterday. This also you say forgot. I said there are 4 quadrants. What is the first quadrant? Expense. Second quadrant, income. Third quadrant, liability bar capital. Fourth quadrant, asset. You take any account. We did the transactions yesterday. We saw the questions yesterday. Which questions, sir? Wonderful. Illustration 2. I asked you, these are the following accounts. These are all accounts. All these are accounts. We classified them under 2 categories. One as per modern rule, one as per golden rule. So everything and anything, you were comfortably putting them under either asset category or liability category or capital category or income category or expense category. Which means experts said that you take any transaction, in that you take any accounts, you will be able to classify them under these 5 categories. When this is 5 things, that is what I require. If these are the 5 things, that is what I require, then why should I go to golden rule? Debit the receiver, credit the giver, debit what comes in, credit what goes out, debit all expenses, losses, credit all income and gain. So they said nothing doing. We'll come out with a new rule called as modern rule, because there are so many transactions. There's so many transactions where we could not derive whether this transaction, this account should be debited or credited. We couldn't derive. We couldn't conclude from the golden rule. Therefore, we had to come out with this modern rule. Modern rule came from where? Golden rule only. For modern rule, what is the base? Golden rule is the base. We are not deviating from the base. From the golden rule only, we have evolved to the modern rule. So what does the modern rule says? Modern rule says that for me, the classification is not real account, personal account, nominal account. For me, let's talk real. Let's talk sense. Accounts is all about what? Income, expense, asset, liability, capital. So these are the 5 primary categories. Let's categorize them under these categories. You take any account, either you'll be able to put in asset or liability capital or expense or revenue. So these are the classifications. These are the classifications. In golden rule, what is the classification? In golden rule, what is the classification? 3 classification: personal, real, nominal. Under personal, natural, artificial, representative. No drama like that here. Game is very simple. Cash, what classification? Asset. Bank balance, asset. Creditor, liability. Sales. Everything you put in asset means what should I put in income? Sales. I'm selling this remote. What do I get from this? Income. So sales, what flavor do you get? Income. Interest received. Interest I get. I have surplus money. I gave it to the bank for as fixed deposit. Banker is giving me fixed deposit. Ka interest.
Income.
It is income. Commission I'm receiving.
Income.
Commission I'm paying. Expense.
Expense.
People I'm paying. Plant and machinery. Plant and machinery purchase.
Asset.
Still asset. Are you sure? I use the word purchase. Still asset only. Okay. Which means you take any account, you are able to classify them under either asset or liability capital or expenses or revenue. Any problem? No problem. Okay. So if I ask you what are the classifications as per modern rule, how many classifications are there? 5. Don't say 4. It is 5. But liability capital, I to put it together because the rule is the same for both. So I combined it. But liability is a separate classification. Capital is a separate classification. Though capital comes under liability only. But capital is always internal liability. And when I say liability is external liability. What is internal liability? The money that you owe. Liability means what? Money that you owe. Now, internal liability means what? The money that you owe to the owner is called as internal liability. And the money that you owe to the outside people, third party, are called as external liability. So in accounts, liability generally means external liability, whereas capital means internal liability. But both of them are belonging to liability family. Now, please make a note of this. This is called as modern classification or modern rule or accounting equation approach or American approach. Also called as, I gave this name, it is also called as increase and decrease method. It is called as increase and decrease method. Why it is called as increase and decrease method, you'll understand in next sometime. Increase and decrease method. Following are the classification as per modern rule. Note it down. Fast. Accounting equation approach. That's right. Please tell me, what is the meaning of debit and credit? What is the meaning of debit and credit? Plus and minus. Debit credit is nothing but plus and minus. Debit will act as sometime plus, sometime minus. Credit will act as sometime plus, sometime minus. This part I'll prove today. This part I'm proving today. Note it down. Now leave some line. Write an example. Ram introduced rupees 10,000 as capital in cash. What is this? Transaction. It's a business financial transaction. Ram is introducing the capital in the business. So it's a business. Money is coming, financial. And this is happening between two people. In two people means one is Ram, another is business. Business and owner always are separate, different. So Ram is giving capital to whom? Business. So business is separate, Ram is separate. So transaction means what? An activity happening between two people, or exchange of goods or service of money between two people, wherein one person is business, another person is some party, third party, owner party, single party, whatever you say. Two people. So this transaction is between Ram and business and Ram. Second, in this transaction, how many accounts are affected? Please tell. Two accounts. Are you sure? Yes. Which account? One is cash for sure. Second is Ram capital. Ram's capital. Two accounts are affected. Any problem here? Okay. So now, cash and Ram's capital. These are two accounts. Am I right? My question to all of you. Once you identify the accounts, second, you're supposed to classify. As per modern rule, please tell me, cash is what classification? Asset, liability, capital, expense or revenue? Revenue means income. Now, what is revenue? I'll tell you in some time.
Asset.
Asset. Very good. Ram's capital. All liabilities are personal account. All liabilities are personal account. So Ram is natural personal account. But we're doing modern rule. So as per modern rule, Ram's capital, what classification? Capital classification. Because capital separate classification is there. So don't say liability. It is capital classification. Who's saying this? Modern rule. My question to all of you. Ram is giving what to the business? Ram is giving cash to the business. Today Ram gave 10,000 rupees. So in business, how much money is there? 10,000. Tomorrow, Ram gave another 10,000 rupees. Now business having 20,000 cash. Day after tomorrow, 10,000 rupees. 30,000. So if more cash comes inside the business, my cash balance, the cash in hand will increase or decrease? Increase. So are you trying to tell me that this is money coming inside? So money comes means impact is what? The balance will increase. If money is coming inside, what will be the impact of the balance of that? Cash ka balance ka impact will be what? It will keep on increasing. Modern rule says that whenever you come across a asset account, and if the asset balance is increasing, you have to give a debit. You have to give a debit. What are you supposed to do? Debit. You have classified something as asset. Once you classify something as asset, check whether this asset account, ka balance, cash balance, bank balance is increasing or decreasing. Increasing means debit. Sir, how do we remember that? AD. All of you know AD? You studied this in history. AD, BC. That in history, no? You all studied history. Or you never studied history? Or studied history. Which means like how we were harassed, you were also harassed with history. Wonderful. Then no problem. AD, BC, before Christ, after death. That is the full form, no? Asset, increase, debit. Aha. Yeah, appreciate. I'm giving idea to remember. Increase asset, debit. Now apply your common sense. Increase means what? Plus. To increase or add asset, I have to give debit. To decrease asset, what I'm supposed to do? Credit. To decrease asset, I'll give credit. Because increase ka opposite, decrease. Plus ka opposite, minus. Debit ka opposite, credit. What is the rule here? What do you think the rule is? You create the rule now. What is the rule here? To increase asset. To increase asset. Add asset. What am I supposed to do?
Asset increases will debit and asset decreases will credit it.
Very good. To decrease asset. Decrease means what? Minus. Credit. And why did I put this debit balance? This you will understand better when I do ledger. When I do ledger, we will learn what is the meaning of debit balance and credit balance. As of now, remember that always assets have what balance? Debit balance, debit balance, debit balance. I'll ask you every single class literally what is the balance of asset, liability, capital, income, expense, gain, losses. You should tell me correctly. Or else you have to give me one Ferrero Rocher box. I'm not saying one chocolate. I'm saying box. That's painful. My question to all of you. Ram's capital. Classification is capital. Internally, can I say, for business it is a liability? It is internal liability for the business. Tell me yes or no. Today I took 10,000 from Ram, which means I have a pressure to repay this money back to him in future. Today I took 10,000 rupees from him. I have a pressure on my head that I have to repay this money back. Whenever Ram asks, I have to repay the money back. Or whenever the business closes, we have to repay the entire capital back to the owner. So Ram gave me 10,000 today. Tension increased by 10,000. Ram tomorrow gave me 20,000 rupees. Tension further increased by 10,000. 20,000 in total. Day after tomorrow, Ram gave further 10,000. So what is my total tension now? 30,000. So liability is equal to tension. Liability is equal to tension. So more liability you get, the more liability you get. The liability increases or decreases? Increases. So here, can I say liability is increasing? Liability is increasing. Liability is increasing means addition. When the liability increases, you have to give a credit. When liability is increasing, you have to give a credit. Okay, not okay. Now, how do you remember this? LC. LC stands for liability capital. Oh, like that you want to remember. How do you remember? You guys decide. My rule is very simple. Whenever liability increases, whenever capital increases, we have to give a credit. Which means, sir, this is also increased, this is also increased. This is also plus, this is also plus. What is this, sir? That is why we didn't teach you plus and minus. Because you'll be getting confused when I should add, when I should minus. That's why, what did we do? This increase in plus and minus, we've wrapped with the wrapper name debit. We've wrapped with the wrapper name credit. And debit and credit are opposite to each other. Debit and credit are opposite to each other. Yes or no? My simple question to all of you. Income. I earned 100 rupees income today. Correct? Tomorrow I earn 200 rupees income. Will I add or minus? Add. Okay.
Add.
Day after tomorrow, my income is 400. Add or minus? Add.
Add.
What is my total income?
700.
Today I incurred 50 rupee expense. Tomorrow I incurred
minus.
Add or minus?
Minus.
Donkey fellow. Expenses total add. No, all expenses together will add. Day after tomorrow, 200 rupees expenses. Again, expenses you will add. So expenses in itself you will add. Income in itself you will add. So how much is my total expenses? 400. Now, when these two opposite items, when you put together, then we have to do plus and minus. So this is plus item. This is minus item. Overall result is what? 300 in plus. Same way, imagine this was cash. Cash is asset. So asset came on coming in. Cash came on coming in. 100 came, 200 came, 400 came. So how much total cash came? 700 now. And this money you got from the owner. So this money you have to repay back to the owner. You have to repay back to the owner. So 50 rupees you have to repay back, 150 you have to repay back, 200 you have to repay back. So how much total you have to repay back? 400. So all the repay items also, you are adding only, no boss. If this is asset, this is liability. No, capital is liability. Capital is liability. So all the assets together we add. All the liabilities together we add. But total asset and total liability we subtract. So when I teach you with plus and minus, or if somebody is teaching you with plus and minus, it is so confusing. When should we add? When should we minus? It's total confusion, total chaos. And the experts believe that let's not do this. I will give a rule of debit and credit. Instead of using the word plus and minus, substitute that plus and minus with debit and credit. Then later I'll give a format. Put the data in the format as I say. At the end, you do the balancing of the ledger. Where are you supposed to put it? In the journal followed by ledger. As I say, apply debit credit. As I say, do the journal and ledger. At the end, the format in which I've created that ledger, no. That format itself will take care of what I should add and what I should minus without applying your mind. So without applying your mind, we will decide in ledger that what all items should be added and what all items should be subtracted. So which means the person who created this rule was very clear that there should not be tremendous pressure on the heads of the person who's learning accounts. You have to keep it simple. So he came out with the concept of debit and credit with few more rules and format. When all of them are put together, a beautiful accounting structure has been created where you do the transactions, you record the transactions, you record the journal, ledger, everything. At the end, you get to know which is going to add account, which is going to minus account. You are not even thinking consciously which item is going where, but wherever it is supposed to go inside, it will go inside automatically. So this entire system, to get a complete feel of it, you'll get a beautiful feeling only at the end of the level. When the entire accounting process is completed, you'll appreciate the step-by-step procedure that was created. If this step of procedure was not that great, by now, some other expert would have come and totally revamped the entire accounting process. But till today, every single person, that is including all the chart accountants, are okay with this process. Means this is the best system that we have in the country. And forget it, this is what people follow in abroad also. So these are the best accounting practices at the domestic level, at the international level that we follow. So once you get to know the entire end-to-end accounting process, you'll appreciate the beauty in which they have drafted the entire system. You'll be flabbergasted to see that, oh, so much things, this simple rule is taking care of. The complicated transaction, with this simple rule, you can get a solution. That is the beauty of accounting. It might take some time to put the concept of modern rule in your head because you've been used to golden rule now in the last 2-3 days. To get this into your head, it'll take some time. But you have to put this in your mind because we cannot get all the answers from golden rule. In 12th, we are never going to use golden rule at all. Only modern rule, modern rule, modern rule. Coming back. Ram's capital, I said you, if I get more and more capital from Ram, I have to pay more and more money back in future. When Ram gives me money, tension increases. So increase in tension, credit. To increase liability, credit means to decrease liability, debit. So what is the rule here? To increase liability, to add liability, I will give a credit. And to decrease liability, I have to give a debit.
Debit.
Did I say asset and liability are opposite to each other? If asset is debit, liability is credit. If asset is credit, liability is debit. Am I clear? One second. I told you, debit and credit is nothing but plus and minus. Debit will act as sometime plus, sometime minus. Credit will act as sometime plus, sometime minus. So now we had come to a conclusion. That cash account you will debit, capital account you will credit. Yes or no? This debit and credit you decided based on which rule? Modern rule. Can we cross check the same answer whether it is coming in the golden rule or not? As per golden rule, what classification? Cash is
Asset.
real account. Yes. No. Golden rule. Golden rule is real account.
Real account.
Real account. And Ram's capital is natural personal account. Wonderful. In real account, what is the rule? Debit what comes in, credit what goes out.
Credit what goes out.
Cash is coming in or going out? Cash is coming in. So what am I supposed to do? Debit. Oh my God. Here also debit. Here also debit. Liability, natural personal account. What is the rule? Debit the receiver, credit the giver. Whose point of view? Not business point of view. Opposite
person point of view.
Opposite person. Ram is receiver of capital or giver of capital? He's the giver of capital. He's giving money. He's giver of capital. Debit the receiver, credit the giver. He's a giver. Debit the receiver, credit the giver. Oh my God. Both are same. So whether you apply golden rule, whether you apply modern rule, for the journal, you'll get the common answer. This is debit and this is credit. The only difference is that there are certain complicated transactions for which we cannot get a proper answer from golden rule, because golden rule approach is very narrow. It's very restricted approach. Whereas modern rule approach is very broad. You can fit in a lot of complicated transactions and very easily you can get the solution for it. That is the beauty of modern rule. So if I ask you, asset, what type of balance it is? Asset, what type of balance? Debit balance. If asset is debit balance, liability will be opposite balance, credit balance. Wonderful.
Credit balance.
To increase asset ka balance. When I say asset increase means what? If more cash comes in,
Debit.
cash balance will increase. If I get more money in bank balance will increase. If I get more asset, my asset will increase. If I get more furniture will increase. If I get more land will increase. To increase asset, what am I supposed to do? Debit. Because for a debit balance item, who is the hero? For a debit balance item, who is the hero? Debit is the hero. To increase, debit. For a credit balance item, who is the hero? Credit. To increase, credit. To increase, credit. Any problem? So my question to all of you: asset is what type of balance? Asset is what balance? Loudly. Asset is what balance?
Debit
Debit
balance.
balance. Liability what balance?
Credit balance.
To increase asset. To add asset, debit. To decrease asset, credit. To increase liability, credit.
Credit.
Liability, debit. Any problem? No problem. You'll take some time, but I'm sure couple of classes down the line, you'll be very, very comfortable with this. Like how asset is debit balance, expenses are debit balance only. Sir, how, sir? Golden rule. In that we have nominal classification. No? What is the classification says? Nominal rule. Debit all expense and losses. Debit all expense and losses. Credit all income and gain. So expenses ka nature is always debit balance. Even in golden rule, even in modern rule. Debit all expense and losses. So that you can remember. So expenses, what type of classification? Sorry, what type of balance? It is debit balance item. Asset, what balance? Asset, AD.
Debit balance.
Asset is debit balance. Liability, credit balance, LC.
Credit balance.
Like that, expense is what balance? Debit balance. So can you tell me two debit balance item? One is asset, second is expense. If expense is debit balance, income is what, sir? That also will be debit balance only. Settle?
Credit.
It will be opposite. If expense
Credit balance.
is opposite each other, the balance also will be opposite. If expense is debit balance, revenue is credit balance. Revenue is nothing
Credit
but
balance.
income gain put together. The classification is called as revenue. Revenue means what? Total income. Income plus gain put together is called as revenue. Both of them put together is called as revenue. As per nominal rule, debit all expense and losses, credit all income and gain. Credit all income and gain. Any problem in this? Now please tell me, you tell me the rule now. You tell me the rule now. To increase expenses, what I should do? Apply the common sense. To increase expense. Who is the hero of expense? Debit balance. To increase expense, that is add expenses. What I should do? Debit. Then to decrease expense, credit. Any problem? Who is the hero of revenue? Credit balance. So to increase revenue, what will you do? Credit. To decrease revenue, debit. Any problem? Online people, any problem?
No, sir.
No, sir.
No, sir.
No, sir.
Okay. Now, FFLA purchased thousand chocolates at rupees 1 each by paying cash to Ram. First of all, is this a business financial transaction? Yes. Ma'am is telling no. Why, ma'am? Why it is no? FFLA purchased 100 chocolates. Why? I can't buy chocolates. Huh? I'm buying chocolates with intention. Oh, you thought FFL is academy. No. FFL is a chocolate selling shop. Now, okay. She's very particular. Sir, FFL academy. Chocolate. Madam, still if I buy chocolate for academy, it's a transaction. Because though I'm not going to sell it, I'm going to distribute to my students, no? So for me, it is expenditure, no? So this is definitely business financial transaction. Even chocolate I'm buying for giving it to my students, still it is a transaction. Madam, good morning. Either. Now, is this a BFT or not? Yes. 100% BFT. Very good. Tell me how many accounts are there in this transaction? Are you sure? It's a big question. Lengthy one. So 3 also could be there. Tell.
2 accounts.
In FFLA ka book mein, I will not open a FFLA account.
Purchase account and cash account.
I'm in the business of buying and selling chocolate. So purchase I need to record because it is my expense. Chocolates is stock. I said you chocolate ka account will open. Chocolate ka account is nothing but stock account. I'll open, but not now. At the end of the year. Not now. Ram, I will not remember because I already paid money to Ram. So next I need to remember is cash. Any problem? No problem. So the two accounts that are affected is one is purchase account, second is cash account.
Cash account.
As per modern rule, what classification? Purchase is what classification? Expense.
Expense.
What flavor you
Expense and
get? Guess expense ka flavor hai. Expense ka flavor. More purchase, more expenses, we don't like it. Unless and until you buy your clothes, dress, that you like it. Because it is not your money, no? Somebody else is earning the money. You like spending it. So purchase is what classification? Expense.
Expense.
Cash what classification? Asset classification.
asset.
Expense what nature of balance? Type balance. Ah, very good. Debit balance. Asset what balance?
Debit balance.
So all those who thought that in one transaction, if two account is coming, one will always be debit balance, one will always be credit balance. This question proved you wrong. How many of you thought like that? Raise your hands. Honestly. One. Right? No? Two. Anybody else who thought that always these both will be opposite? No. There's no rule like that. But you will be surprised to see that one will become debit, another will become credit. Now, I ask balance. Balance can be anything. Type debit, credit, that will be opposite. Okay. Now, purchase is debit balance. If I do more purchase, purchase ka value will increase or decrease? Increase. Wonderful. For purchasing goods, I'm paying cash. If I keep on paying cash, my cash balance will decrease. So increase means add, decrease means minus. To increase a debit balance item, to decrease is to increase a debit balance item, what I should do? Debit. Debit. You come out of that. That is wrong. DR doesn't stand for debtor. It stands for debit. Donkey fellow. Itna acha explanation bhi diya. Poor fellow I am. Still you said debtor. My heart you broke today. To increase a debit balance item, debit. To decrease a debit balance item, credit. As per golden rule. Purchases, nominal account. Purchases, nominal account. What is the rule? Debit all, expense and losses. Debit all, expense and losses.
Credit.
Cash, real account. Debit what comes in, credit what goes out. If I pay money, cash goes out. Credit what goes out. You take any transaction, very comfortably you can do the classification in modern rule. Now I'll prove it to you where golden rule is a disaster. Are you all ready? Geared up? CT, what क्या बोलते हैं एरोप्लेन में? हाँ, यानी हिंदी में अपनी कुर्सी का पेटी, हाँ पेटी बांध लो. You have any पेटी here? No पेटी. Sir, you didn't provide only. Okay. Hold each other's hand. Now you're going to get earthquake. FFLA is into business of buying and selling chocolates. Correct? I purchased this chocolate with intention to sell. Unfortunately, what happened is I have my birthday coming on 23rd July. Mark the date. Really, I'm telling you, not for example's sake. 23rd July, mark it, note it now. Birthday. Don't forget to wish me. Now, you will ask me chocolates or not. Say, your birthday, give me chocolates. Please tell me, as a chocolate owner, will I go and buy chocolates from another shop? No, I have khud ka factory, boss. I have khud ka shop. I'll take obviously from my business. So now what I did is, I took this chocolate and I'm giving to you, my family members. Am I selling it to all of you? No.
No, sir.
So, when this 1000 chocolate were purchased for 1 rupee, my total purchases were for 1000 rupees. This 1000 rupees is my expense. Modern rule, golden rule, allowed you to record this 1000 as purchase expense because you promised that you will sell. You promised that you will sell. So we allowed you to record this as expense. Income tax department said. Income tax department says that if this 1000 rupee ka chocolate, if you're going to sell for 3 rupees, 1000 chocolates, if I sell for 3000 rupees, sorry, if I sell 1000 chocolates for 3 rupees, what is my total income? 3000. To earn this 3000 rupees, how much money did you spend? 1000. So balance 2000 is your profit. So with the help of purchases, with the help of expenses, my income reduces. In reality, income reduced, no boss. I spent 1,000 from my pocket. How much I got? 3,000. In my pocket net, how much money is there? 2,000. So what is your profit earned? 2,000. Now, imagine if income tax department did not allow you the expense and said that whatever revenue you are making, no, whatever income you are making, no, on that pay tax. Will you be happy? On 3,000 rupees, if I ask you to pay 10%, your tax is 300. On the other hand, if income tax department says that on your net income, means after minusing your expenses, you get an income, no? On the 10% is how much? 2,000. Will you be happy to pay 300 or 200? 200. Which means you're happy if you're getting a deduction in your business in form of expenses. Which means business people are very happy when they record expenses because expenses help them to reduce their profit, thereby reducing their taxes. So expense is good or bad for the business? Good for the business. So income tax allowed you to record this 1,000 as expense, provided what promise did it take from you? That you will sell it. What did I do? I broke the promise. Instead of selling, what did I do? I withdrew the money for my personal purpose. I withdrew that goods for my personal purpose. I withdrew the chocolates, not money. I withdrew the goods from business for personal purpose. Will income tax allow me still to claim this 1,000 rupees as expense? No. If you are in place of income tax, will you allow me to claim this 1,000 as expense? Tell me. No. Because you're not selling it. Why should I give this expense? Which means everything that I buy at home, everything that I buy for home, can I record as expense in my business? Income tax department says that for the business, what income you're earning, for that what you're spending, that only I allow as expense. Every other expenses that you incur at home, no, you can't record here. Like that, if they allow, what will you do? In your business, if 10 lakh is profit, no, to reduce it, to make it zero, what will you do? All the household expenditure will record here. Then nobody will show profit. Nobody will pay tax. Then how will income tax department get the profit? How will they run the country? Think about it. So income tax department very clearly said that if you are withdrawing the goods from the business, we will not allow you to record this as expense. Okay or not okay? Okay, no? Okay. Now I'm telling that the above chocolates are withdrawn by the owner for personal purposes. Is it a BFT or not? Is this a BFT or not? 100% BFT. This is a transaction happening between owner and FFLA. In this transaction, what is happening? Exchange of goods. FFLA is handing over the chocolates to owner. 100% transactions. So we have to capture. So in this BFT, please tell me how many accounts are affected?
Two accounts.
One is
drawings account.
One is withdrawal
and
account.
purchase
Drawings
account.
account.
Drawings and purchase account.
Okay. One is saying drawings and purchase. But in this entire transaction, I never put anywhere purchases.
Sir, because we withdrew it for personal use, sir.
Correct. Who's saying online?
Sir, Dharya.
Dharya is saying. Dharya, you said drawings and purchase?
Yes, sir.
Okay, got it. I'm coming back to you. But I didn't put the word purchase anywhere in the transaction. Since I didn't put the purchase in the transaction, can I record purchase account here? No. Donkey fellow, when did I say that whatever the language is given in the transaction, that account only you have to open? When did I say that? What Dharya said is absolutely correct. He nailed it. He said two accounts affected. One is withdrawal account. Withdrawal account ka name is what?
Drawings account.
Drawings account. And second is purchase account. Why drawings account and why purchase account?
Because we are drawing the goods for personal use.
No, that is not the reason. When you purchase the goods, you promised me to sell the chocolates. We allowed you to record the expenses. How did you record the expense? By giving a debit. By debiting the expenses, by debiting the purchases, you booked the expenses. Now, when you broke the promise, can I allow this 1,000 rupees to be in the purchase account? Can I let it be an expense still? No. I need to reverse it. That's how purchase account came into picture. Any problem? Again, I'll repeat. Don't worry. Purchase account as per modern rule. What classification? Modern rule. It is coming under expense. Expense is what balance? debit balance. To increase expense, debit. To decrease expense, credit. Here, if I keep on withdrawing the goods of the business for personal purpose, income tax department will say reverse all the expenses. Initially, whatever purchases I did, where did I record? In purchase account. What is purchase account? Expense. Which means we increase the expenses. When we bought all the goods, no, that time all the expenses were recorded in purchase account. Purchases will increase expense. Which means income tax department allowed you to record the expenses. Now when you broke the promise or not? Instead of selling it, what did you do? You consume for the personal purpose. You withdrew for the personal purpose. You broke the promise given to income tax department. So what will the income tax department say? Whatever expense you have recorded, no, cancel it, reverse it. To increase expense, debit. To decrease expense, credit. So here, when the goods is withdrawn from the business for personal purpose, we have to reverse the expense. To increase the expense, debit. To decrease the expense, credit. Here, this is what is happening. We have to reduce our expense because we cannot record our personal expense in the book. Please tell me that 1000 chocolates which I bought in the business for selling, I took for my personal purpose. Is it not personal consumption? Is it not personal consumption? Can I record personal expenses in the books of accounts? No. But you played it very smartly. You knew that you want 1000 chocolates in the personal life. So therefore, what smartly you did? You recorded this 1000 as business expense. Telling that, no, I'll sell. Later, what did you do? You consume for personal purpose. Do you think income tax department is a fool? Hello? No, you can't outplay. You have to be very, very clear with what the rules are. If you are recording expense, means you have to use that in the business. If you're using for your personal life, you can't keep that as your expense. So expenses, what you record have to be now reversed. To create expense, to increase expense, you gave a debit. Now to decrease expense, I should give a credit. To increase, add. To decrease, minus. Therefore, I'll minus. Decrease means what? Minus. Any problem? Drawing as per modern rule. What classification? Drawing means it is belonging to owner. Owner means capital. So drawing is belonging to capital family. Drawings is belonging to capital family. Drawing is belonging to capital family. So if owner is giving more and more capital, capital will increase. Capital can be given in form of cash or kind. We discussed this in basic accounting terms. I purely gave you the meaning of capital. Now you understood why we spent almost 4 to 5 classes on basics. Had I not explained what is capital there, today it will not make sense. I told you capital can be given in form of cash or kind. What example for kind I gave? What? No. You tell the example what I gave. I gave an example. No. You're right, but that is not the thing what I gave in kind. Laptop. Remember, I said when I started this FFLA, I gave some capital in form of cash. But I didn't give the money for laptop because I already had laptop. So I gave the entire laptop as capital to the business. So that time I told you that capital can be given in form of cash as well as kind. The problem is you guys don't revise. The PDF what I gave, no? How many of you revised it? If you think that whatever you studied, good, if you revised very well, whatever you studied, forever you remember. No. Because you're belonging from Gajani family. When I say Gajani family means your brain is belonging from Gajani family. Which means what? Whether it is you or me, if we do not revise in regular intervals, forget you, even I'll forget. Leave you, even I'll forget. If today I'm learning something new, like how you're learning accounts new only, no? Like that, if I'm learning a new subject today, some other new subject, let's say artificial intelligence. If I do not revise in regular intervals, after 1 week or 2 weeks, my condition is also going to be like you only. But I will not do that mistake because I know I've realized the importance of revision. There is a method of revision. You know what is the method of revision? Did I discuss with you? No. Yes, sir. What is it? When you complete your class, within 12 hours, you have to do the first revision. The day you complete your first revision, from there, within 48 hours, second revision. From the end of the second revision, at least 1 week you have to give a gap and do a third revision. From there, revise once in a month. If the topic is very critical, you cannot wait till 1 month, then revise in the between somewhere after 10 days, 15 days, 20 days. So this is compulsory. This is compulsory. Whether you like it or don't like it, this is the rule. That is how the brain that we've got from God. You can't retain in one shot for longer period. Are you able to follow? Are you able to follow? So the example what I gave is capital can be given in cash or in kind. So cash came in, goods came in, capital increases. The same thing is withdrawn now. Capital will decrease. So increase of capital we record in capital account and decrease of capital we record in drawings account. Drawings account. Note it down. When the owner is giving capital, when the liability of the business increases, we record the increment of liability. We record the increase in the capital account, but decrease is not the same account. Decrease will be in separate account called as drawings account. There's a logical reason for it, which you'll understand not now, eventually. Whereas this expense is there, no, you record it in purchase account, reversed in purchase account. But there are three items where you'll record in one account and reverse in another account. Those three items are, you record purchase in purchase account, purchase return in purchase return account. You record sale in sale account. Upon returning it, not in sale account, you reverse. You reverse in sale return account. When the owner gives money in form of capital, that is recorded in capital account. When the money is given back, it is recorded in the drawings account. So these are the three items where in and out is recorded in two different accounts. Whereas you take cash, cash coming in, cash account, cash going out, cash account, bank coming in, bank account, bank going out, bank account, furniture coming in, furniture account, furniture going out, furniture account. Everything else will happen in the same account. Only these three items are there. Purchase expenses recorded in purchase account and reversal of purchases when the returns are done. When the returns are done,
Purchase return
recorded in
account.
purchase return account. There's a logical reason for this. This I'll explain when I come to the journal talk. Every single thing in accounts. If you ask a why to it, I have an answer. Every single answer. Every single question, I have an answer for this. Drawings is belong to which family? Capital family. To increase capital. Okay, capital is what balance? What balance? Debit balance or credit balance? Credit balance. To increase capital? Credit. To decrease capital? Debit.
Debit.
Capital. To increase capital? Credit. To decrease capital? Debit.
Debit.
Owner gave capital. Owner gave capital to the business. So business ka capital increased.
Increases.
Business gave that back to the owner. Business gave back to the owner. So capital decreases. So drawings is nothing but decrease in capital. To decrease capital, what am I supposed to do? Debit. So what is drawing? Drawing is debit. Purchases credit. Now clear? You will understand this even better when I do journal. Few more classes to go by. This is a little bit complicated one. But why I did this now is because I wanted to compare this with the golden rule. That's why I chose this complicated transaction today to discuss. Same transaction. Let's talk from the golden rule point of view. Drawings is nothing but an account which belongs to the owner. Owner is personal, real or nominal? Owner is personal. Which personal? Natural personal.
Natural personal account.
What is the rule? Debit the receiver, credit the giver. Always from opposite point of view. Here when the owner is withdrawing the chocolate, is he the receiver of chocolate or giver of the chocolate? He's a receiver of the chocolate. So debit the receiver. He's the receiver. Debit the receiver. Super sir. Both are matching? Yes. This will match. Next item will not match. I'll ask you now. I'm coming. First, are you clear with these drawings? Drawings and capital both are belonging to owner. If owner gives money, capital account. If owner takes the money back, drawings account. Giving in one account, taking in another account. Okay. So capital account and drawing both are belonging to owner. Owner means personal. Which personal? Natural personal. Debit the receiver, credit the giver. So when the owner is withdrawing the chocolate from the business, he's the receiver of the chocolate. Business gave the chocolate, but owner is receiver. Debit the receiver, debit the receiver. So drawings account is debited, even as per golden rule. What is another account? Purchase account. Oh my God. Okay. What is the classification as per golden rule? Nominal account. Nominal account. You say expense, that is modern rule, my dear. As per golden rule, purchase is nominal. What is nominal ka rule? Debit all expense and losses, credit all income and gain. Here, purchase you gave a credit. Here, purchase you gave a credit. Credit is absolutely right. And if drawings is debit here, obviously the other part should be credit. What is nominal ka rule? Debit all expense and losses, credit all income and gain. In which angle this purchase what you're reversing is income and gain for you? Tell me. Owner took the chocolates, no? Did he pay money? Hello? Did he pay money? No. How the hell this is your income? How the hell this is your gain? You tell. Tell. Then you have credited, boss. And in nominal account, you should credit when? When? Only when this income and gain. Debit all expense and losses, credit all income and gain. So we all agreed that drawings is debit. If drawings is debit, purchase has to be credit. Purchase has to be credit. So when I apply the rule, when should I credit purchase? Only when it is income and gain. How this is income and gain? Boss, owner is not giving money. When will you make profit? If I sell, if the owner pays 3,000 rupees, 1,000 ka chocolate, if he pays 3,000 rupees, 2,000 is my profit. Did he pay? How? This is where the golden rule is a failure. Now, how some people try to justify, tell you, which is wrong. They tell that, sir, in this case, no, classify purchase as real account. Classify it as real account. Credit what goes out. Why justification of credit? Because chocolate is going out. Oh. When you feel like purchase, you will classify nominal. When you feel like purchase, you will classify real. In a path, everything is real. When you feel like purchase is expense, nominal. When you feel like purchase, when you cannot fit this in nominal account, now how do you change the rule? No, we'll classify this as real now. You're trying to justify what is, not given in the golden rule. You're trying to justify it. Can you change the account whenever you want to change? Can you change the classification just like that? If that is the case, I'll show you 100 transactions where you are not able to apply the golden rule. Even by changing, you can't apply. Now tell me. So with this, what do we understand? With golden rule, we cannot record all the type of transactions. There are certain transactions, the complicated ones, for which golden rule is not applicable. I'll prove this point. I'll prove this point time and again in your 11th, in your 12th, in your CA foundation, in your CA intermediate. Okay, not okay?
Okay, sir.
My question to all of you. As per modern rule, how many classifications? 5 classification. First classification, asset. Second, liability. Capital. Fourth, expenses. Fifth, income. Revenue. Correct. Asset, what type of balance?
Debit balance.
Liability, what type of balance?
Credit balance.
Both are opposite to each other. If I want to increase the asset, add debit. To decrease asset,
Credit.
if I want to increase the liability,
Credit.
To decrease liability,
Debit.
To decrease liability, debit. So all those who were thinking that debit means plus, credit means minus, this modern rule is put a bomb on your expectations, desire, knowledge, understanding, whatever you say. So it is not true that debit is equal to what you call plus and credit is equal to minus. It will keep on changing. It will keep on changing. Next is liability means also capital. Next is expense. Expense what balance?
Debit balance.
How do you remember this? Golden rule. Debit all expense and losses. So expense is always debit balance. Revenue means income and gain.
Credit balance.
To increase revenue, debit. Sorry, to increase expense, debit. To decrease expense, credit. To increase revenue, credit. To decrease revenue,
Debit.
Increase expense, purchase. Decrease expense, purchase, return. To increase revenue, sales. To decrease revenue, sales, return.
Sales return.
I purchased more and more goods. I purchased 1,000 worth of goods, debit. In that, 200 worth of goods, returned. So what is my net purchase? What is my net purchase? 800. I purchased for 1,000 rupees. In that, 200 ka goods I returned. 200 ka goods I returned. Plus or minus? Minus 200. So what is the net purchase? 800. So purchase is debit plus. And reversal. Purchase return is credit, which is minus. That's why I said purchase is debit plus. Purchase return, credit minus. I sold 1,000 chocolates. In that, customer did not like 300 chocolates. So they returned 300 chocolates. So will I add or minus? Minus. So this is sales. This is sales return. So what is my net sales? 700 is net sales. Sales, credit, add. Sales return, debit, minus. 1,000 plus 300 minus. What is net sales? 700. So what is debit and credit? Nothing but plus and minus. It's nothing but plus and minus.
Plus and minus.
I told except 3 accounts, every other account increase and decrease happens in the same account. Cash increase, cash account. Cash decrease, cash account. Bank increase, bank account. Bank decrease, bank account.
Bank
Bank
account.
increase, bank account. Furniture increase, furniture account. Furniture increase,
account.
furniture account. Land increase, land account. Land decrease, land account. Rent increase, rent account. Rent decrease, rent account. But there are only 3 items where increase will happen in one account, decrease in another account. Tell me which are those 3? When money capital is coming in, capital account. When capital is withdrawn, drawings account. There is an exception to the star mark, which I'll tell only in 12th, not in 11th. There is one exception to this, which we'll be discussing in 12th standard. When you do partnership, fundamentals of partnership, there we have both drawing ins capital and drawing ins profit. That time rule will slightly change. But now let's not complicate, let's keep it very simple. Purchase will happen in purchase account. Purchase return will happen in purchase return account. Remember, we studied the meaning of purchase separately and purchase return separately. Second chapter. One trolley coming inside purchase, the same trolley going outside purchase return. Sales happening in sales account.
Sales account.
Sales return happening
Sales return account.
Sales return account.
Sales return account.
Whereas everything will happen in the respective accounts. If you are clear with this, can I go to the next question? Please take illustration number 4 of your textbook, TS Level book 6.8. 6.8. One by one we'll do. Okay. Starting from here, Srihari, they will go like this, snake, ding, ding, ding. Okay. In between, I can change the order also. So those are thinking, okay, my turn. This is the answer. I'll change the order. Be ready. Srihari, building.
Asset.
Why do you think building is asset?
Because we own it.
Very good. He says we own it. Bingo. Asset. Kratos. Liability. Why do you think this is liability? You have to explain more. Simple language. Who is a creditor? Sir, why we have to pay him? Because we purchased the goods from him on credit. So you have to pay in future. No, so it's a liability. Very good. Gurman, proprietor. What's the meaning of proprietor? Owner. Owner. Gurman. Capital account. Very good. Purchases. Expenses. The more purchase we do, more expense. Okay. Carriage inward. Are you sure? Carriage inward it is. What is the meaning of carriage? Transportation charges. So all charges are expenses. Inward means what? These are the transportation charges which I paid for the goods coming inside. When does the goods come inside? When I purchase it. So carriage inward is in transportation charges associated with purchase.
Expense.
I'm trying to put a seed in mind. This seed will germinate where, you know? This seed should germinate when you come to final accounts. Because there the direct connection is there. Cash. Asset. Why it is asset? Because you own it. Okay. Rent received. नहीं तू मत कर, तू बोल दे भाई, बोल अभी, तू ही तो ऑर्डर में आ रहा है बदमाश. Rent received. I knew it. Which means मैं ऐसे धमकी दूंगा, ऐसे दिखाऊंगा, मतलब तो आंसर चेंज कर देगा. Which means you're not confident about the answer. How much ever look I give, sir, what look you're giving? I know this is the answer. That way, that is how the confidence you should show and exhibit. What is rent received? Revenue, 100% revenue. So what you said initially is 100% right. But life is not so easy. Even when you do certain things right, no, life is telling you, no, poke you. You have to be strong in what you're believing. Sales. माल बेचने पे जो ट्रांसपोर्टेशन आता है वो कैरेज outward the goods going outside. When it goes outside and sell it, when it goes to customer, that is carriage out primarily. Sorry, carriage will go to expenses only. Carriage inward and outward both will come as expense. See, forget inward outward. Carriage means what? Transportation. Correct. When did I say no? When did I say sales is expense? Carriage inward is expense only. Donkey fellow. This is transport. Carriage means what? Transportation charges. Now you are my customer. I am the shop owner. You purchased AC. So I have to do home delivery. For you it is free. For you, it is free. You're not paying money, but I have to pay the money to porter guy, no? I have to pay the money to the transport guy, no? So I'm bearing the expenses on your behalf. So now the AC, what I'm delivering to you is because you purchased AC, I sold AC. But for delivering this AC to your house, I have to incur expense, no? So that expense is called as carriage outward. Carriage outward. So carriage inward, carriage outward, both are expense. Both are transportation charges. But what does carriage inward mean? Carriage inward means the transportation charges which I'm incurring for the goods when it is coming inside. Carriage outward is the transportation charges which I incur when the goods are going outside. Now clear? Okay. So rent received is revenue. Interest payable. Interest payable. Interest payable is saying expense. It's a liability. It is saying interest payable. Interest payable, which means I have to pay. Anything that I'll have to pay in future is liability. So whenever the word is payable with the income and expenses, the word payable, receivable is coming, it means it is either liability or asset only. This you'll understand better in the upcoming classes. Interest payable means what? I'm yet to pay the interest. When will I pay? In future. Anything that I pay in future is liability. Now understand this. Rupees 1,000 interest business has to pay in future. Is this a business financial transaction? Yes. Which two accounts are affected? Which two accounts are affected? So one interest account is affected. And since one I have to pay in future, paying in future is called as payable. Payable. So now one is interest account, one is interest payable account. One is interest account, one is interest payable account. So in this account, in this transaction, how many accounts are affected? Two accounts are affected. Interest is expenditure. Because I took a loan for my business. I have to pay interest. So for me, that interest what I'm paying is expense. So interest is expense. But when I say interest payable, this is not expense. It is liability. Why this is liability? This money I have not yet paid now. When will I pay? In future. So I'm recording two accounts. Interest I'm recording because my expense needs to be booked. And payable I'm recording because I will forget if I don't record this. I have to pay this money in future. I'm Gajni, I'll forget it. So I want to capture this on the liability side. Hence, Sir Lucati passively said that we have to follow double entry system of accounting, which means what? Every transaction will have twofold aspect, twofold impact. In that, one will be debit, another will be credit. So now here, this is interest payable. Interest payable. Just because the word interest is there, do not declare it as expense. It is payable. So what feeling do you get here? What flavor do you get here? You get the liability ka flavor. If it was interest receivable, asset. So in that transaction, interest is income. One aspect is income, another aspect is asset. Why? Because interest receivable means yet to receive. When will I receive? In future. Anything that I receive in future is asset. So interest payable, liability. Interest receivable, asset. Rent payable, liability. Rent receivable, asset. Electricity bill payable, liability. Electricity bill receivable, asset. Bank overdraft. Yesterday we discussed this. 1 lakh money you deposited. When you withdrew the money, how much money you got? 1 lakh 50,000. Extra 50,000. How it came? God gave gift. Tell.
Bank loan.
Who gave it? Bank gave it. Why did bank give? They were having the greed of earning interest. So they said, you want money? No problem. Have a lot of money. You take. But not free of cost. You have to pay me interest. So 50,000 rupees extra money that you've overdrawn. No, that is called as bank overdraft. The money that you withdrawn from the bank, extra in excess of money what you had deposited. So that money 50,000 what you extra withdrew, you have to repay it back in future. Anything that I have to repay in future is liability. Now how the moment I ask the question, instantly answer is coming. That is the power of revision. This dialogue, how many times I have asked you? Anything that I own is what? Asset. Anything that I am yet to receive in future is asset. Liability. How many times I have asked? At least 100 times. Now, even in dream, if I ask you, what is it? You will tell this is asset, this is liability. This is the power of revision. Debtor. Say debtor it is. Debtor it is. B is silent. Who's debtor? Customer. To whom I have sold the goods on credit. So from this fellow, I have to get the money in future. Anything that I will get in future is asset. So debtor is asset. Accrued commission. Another word is commission. Receivable.
Asset.
So I told you
Asset.
accrued commission, that is accrued income, unearned income, prepaid expenses, outstanding expenses. These four I can explain you in depth only in the journal topic, because we have a situation to discuss. Each item will take at least 20 to 30 minutes to explain, which means I'll take 2 hours to explain these four items. That powerful it is, because if this is not understood in true spirit, you'll have a big problem in the financial statements. The next big problem you'll face in 12th standard and partnership. You have to get this very right. Everybody's screwed up here. You will not believe, in 12th currently, there are at least 15 plus people who are sitting and watching the recording of 11th. You know what are they watching? Rules of debit credit. Which rule? Modern rule. Because golden rule was taken in their school. Modern rule was not taken. And today they're not able to apply golden rule in the 12th standard. They're sitting and watching rules of debit credit. They're watching journal topic. Because journal they're not strong. In 12th, the first two book, full journal and ledger. They're not able to apply what should I debit and what should I credit. So what we are spending time now we're making it so strong that in 12th, very easily you'll tell this is debit and credit, and where your friends who are not strong with this debit and credit, they'll struggle even in 12th. So currently 15 plus people are sitting and watching 11th recording in 12th. 12th itself is suffocating. No time. What will happen when you come to 12th? That too you're sitting and watching 11th recording in 12th. Where is the time, boss? Where is the time? And what are they watching? They're watching depreciation topic. Why? Because the concept of depreciation is getting linked to your cash flow statement, which is third volume of the 12th TS Deval book. After that, they'll be sitting and watching final accounts and adjustment of final accounts. Without this, you can't survive in partnership. You can't get the question 100% right. You can't get the answers 100% right. Doing 11th and 11th is better, or doing 11th and 12th is better. Now you have one whole year to make your basics very strong. Now in 12th, if you sit into 11th, do you have the mindset to learn it very relaxedly? You are in pressure, do fast. In that, will it register in your mind? No. Even though you paid fees to me, nothing is going to hit. And now how much relaxed you are? No stress. Aram se it is going. And the technique what I have in teaching, that I don't know how many of you are realizing, without your knowledge, there's so many things that have already fed in your mind subconsciously. So the moment I ask, the answer is spontaneously coming. That is the beauty of teaching. Teaching is also an art. Just because I'm teaching, I don't become a teacher. I need to understand the psychology of the student. So I try to drive in a way that the moment I ask you a question, you get the answers. For that, only one thing what I need from you is 100% concentration in class. You just believe in me. It is my responsibility to ensure all the data is fed in your mind smoothly. And the pain also will not know. Have you seen that video where when there's one doctor, and doctor's got a baby, maybe 3 months baby, 4 months baby, 6 months baby. He'll try to play around with this baby. In no time, he'll poke. He'll poke that vaccine injection, and the baby will not cry. That is what I'm trying to do with you. So I'm hurting you, but you don't even know that I put an injection to you. That is the beauty in which I'm putting all the data in your mind. So data also fed, injection also given, pain also not visible. Interest earned. They never say interest receivable. Interest earned. They're talking about interest income. Interest income. Indra, oh my God! But what have they done? Debit asset they put. Is it right? 100% wrong. Interest receivable is asset. What is the language that they've used? Interest earned. This interest is expense incurred, income earned. Both are revenue. Interest earned is revenue. This is not asset. This is revenue. Please write it down. Had they used the word interest receivable, that is asset. Interest earned, sale income earned, rent earned, all these are revenue. These are not asset, these are revenue. Interest receivable, accrued interest, like commission receivable, accrued commission. When these word comes, no, these are asset. Interest earned is not asset. This is revenue. Any problem? Rest all matching? Rest everything else is matching? Yes. Rent received, rent earned, rent received, rent earned. Please make a note. Rent received or rent earned is revenue. Rent receivable.
Asset.
Very good. RECEIBABLE, or accrued rent are asset. Rent received. In same manner for expenses. Rent paid or rent incurred
Expense.
is expense. Whereas rent payable and
Liability.
outstanding rent is
Liability.
liability. Sir, you know more than textbook. Textbook is saying this is asset, interest earned is asset. You're dealing revenue. Who can do mistake? Can it not do? 100%. Now imagine they only give rent, they only give commission, paid, received, earned, incurred, nothing given. They only give rent and commission. That's all. Now, how will you know whether this is revenue or expense? Always make a note that whenever the question is silent about whether this is rent received or rent paid, commission received or commission paid, always we will assume this is by default expenses. By default, whenever you get a classification as only rent and commission, any item with there is no received word, paid word, earned word, incurred word, we always assume that it is of this category. We always believe that this is of this category. So whenever the question is silent about, whenever the question is silent about whether an item is income nature or expense nature, always treat that as expense. Whenever the question is silent about whether it is income nature or expense nature, that is rent received income nature, rent earned income nature, rent paid expense nature, rent incurred expense nature. When such information I don't have it, always we'll assume that it is of expense nature. It is always of expense nature. This is a standard rule that we have for 11th CBSE, 12th CBSE, CA Foundation, CA Inter, CA Final. Everybody. It's a universal norm. Noted?
So, income we have to treat as expense.
Sorry?
Income nature also we have to treat as expense.
How do you know this is income nature, boss? That's what I'm telling. The question is silent. The question does not say anything. That time you have to assume, I'm telling. If the question says this is income nature, how will you assume as expense? Yes or no? Tell me. Hello, tell me. Got it, not got it?
Yes, sir.
Online people, got it, not got it?
Got it, sir.
Yes, sir.
Good.
So now we'll try to spend maybe 1 or 2 more classes. Mostly I should be winding up in the next class, which is Tuesday. If not, if we need more time, we can spend one more class also on this topic, because we have 3 big questions to complete. In that, 1 I'll do definitely, 2 I'll try to give it as homework. But if you feel no, sir, that also please do it. Then maybe 1 more question I want to do homework. So we see 5th question is what we have to do. 5, 6 is pending. And from golden rule, what is pending? Question number 3 is pending. So 3, 5, 6, 3 questions are pending. In that, 1 pakka I'm going to do. Remaining 2 is homework. In that, if you want me to solve any one question one more time in class, I'm willing to do. I have no problem. So Tuesday we should be done with this topic, and Thursday we should be starting with the next topic, which is journal entry, which is a continuation of this topic. Now that you know what is debit and what is credit, what account I should debit and what account I should credit, in the journal, I'll give you the format of how you should present the data. Same data, how you should present. So presentation aspect is what you're going to learn in the journal doc. Rest all, the rule is the same. Rule is going to be the same. So in the entire journal, we'll apply both golden rule, modern rule evenly. In journal, in 11th, we'll apply both golden rule, modern rule equally because both are there in your syllabus. But when we come to 12th, we'll only apply modern rule, modern rule, modern rule. With that, we come to end of today's session, people. That's all from my side. I'll see you all in Tuesday's class, which is 7 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you.
Thank you, sir.
Thank you.